Hi, welcome into this Employee Retention Credit 2022 review, where I'm going to be showing you how to apply for the Employee Retention Credit Program step by step from the start to the end, a demo, what this program is all about, how you can get up to $26,000 per employee, as you see on screen, plus up to $5 million in funding, plus tips to back that up towards the very end, so you know what you're doing to get funding, not only with the employee retention credit, but as your business loan broker / agent who's helped out a lot of people of all industries, how to get the right funding to help you move forward and beyond. My name is Michael from Viral Funding Solutions, and no further introduction, let's get right into this. So what is the Employee Retention Credit Program, or the Employee Retention Tax Credit, or the ERC for short? It is a refundable credit where you can get on qualified wages. So this is like a payroll tax credit for any or every employee you were able to keep on your payroll in business. You know, as COVID came about, it hindered a lot of businesses. They had to fully or partially shut down, supply chain issues, and decreases in revenue gross receipts. So you'll be given a refundable tax credit. It is not a loan. And I'm going to be covering all of that on this page you see right here that I've also linked to you down below in the description. You can get started. It should be the very first link you click on. It is very safe and secure. But before you do any of that, let me go over why it is important that you understand this program and why it is best to go through here. Now, ERC funding can be complicated, but we can help. We specialize in maximizing ERC, which is short for Employee Retention Credit, funding for small businesses of many types, and I'm going to be getting into some of those. Find out if you qualify. What is the Employee Retention Credit? You can click this video to watch. It should be a short 6-minute video, but it'll go into everything in depth on what it is, what is the application process, and I'm going to be getting into that in a demo here in a minute, so please stick with me. And so the Employee Retention Credit, what I want to answer first is, for those of you who have heard about it and are possibly researching and finding out, hey, is this program still available? Can I still get access to it? We're now in 2022. And before I answer that, I have spoken with the CPA, and I have great connections with, and I have more resources on the program that I wrote down with speaking to them. And so I have a little document here that I'm going to go off of. I have it all up here, but I want to make sure that I'm covering everything detail for detail. But you have 3 years from the date that you filed your original 941 to claim the ERC for that quarter. So it can be any given quarter that you filed, and for that given quarter that you filed your original 941. And what that means is, first quarter to which this applies, quarter 2, 2020, 941, you filed in July 2020. So 3 years from then, you have to file the 941X, which is kind of like a revision. And I'm going to be showing you what those documents look like from the IRS. So please stick with me. And to claim your ERC by July of 2023 to get the credit. And then each quarter after that goes further. So 941 filed to each quarter to qualify. So you would want to submit that, and if you've been around business for some time, you know the 941 form, what to expect. Now you have to have the 941X, kind of a revision, just to see if any qualified wages, what has been added, if anything, what has changed. But again, this is with the payroll tax credit. So COVID-19 has been a challenge for all of us. As the world has shut down, the economy came to a halt, and we're kind of in that post-COVID-19, but there's still a lot going on, leaving the future of many businesses in a precarious position. As we begin to find normalcy again, businesses now have to focus on recovering. And fortunately, several government programs are easing this process, such as the ERC. And it was covered by the PPP program because it just wasn't well sought after, and there were more mainstream media and more being pushed towards the PPP. And it was just what everybody was needing more than anything else. So that's why it was above it. And then there were a lot of things that were changed with the Employee Retention Credit. And that's why you're seeing it being more well known today, which is a generous stimulus program designed to bolster those businesses that were able to retain their employees during this challenging time. So it'll benefit you if you have an amount of employees, no more than 500, less than 500 qualify for, which is a generous stimulus program, as we mentioned, and you were able to retain them during this challenging time. Due to the extremely complex tax code and qualifications, it is severely underutilized. Details of this program will include you being able to get up to $26,000 per employee, and I'm going to be breaking in some of those numbers and how that comes about, so please stick with me. Available for 2020 and quarter 1 through 3 of 2021. But like I mentioned, you have 3 years from the date you filed the original 941 to claim the ERC for that quarter. And I went through the example of the first quarter to which this applies, and you can kind of rewind that if you need to listen to that one more time. Qualified with decreased revenue or COVID events. Now, this is what I really wanted to focus on is, hey, why should you not just go to a CPA? Why should you not go this other route? Because it can be complex. The things that your CPA will look at is the decreased revenue and primarily base it off of that. They won't look extensively into everything, which is not good, because qualifying for the Employee Retention Credit Program is not solely based on having decreased revenue. Like you said, like you see here, a COVID event, that could be a supply chain issue. It could be partial or full shutdown, a government mandate, restrictions that were put upon you and your business. So it's not just based upon decreased revenue like your CPA may think. And if they don't think only that, because they're now more educated in it, there's a little bit of complex information, possibly documentation, the way it needs to all be put together, that your CPA just primarily won't be able to do all for themselves. And they may be, but they may miss something. That's why you need an ERC specialist. You need to go to a broker/agent like myself, who also helps out businesses get funding in all types of ways. I've been able to do it for all various types of industries. I've been in your position before where it's been very difficult to start up a business, not generating revenue for some time, and then getting to a point where you're just trying to understand, how can I get the funds I need and I deserve? What are the qualifications outside of the ERC? And I'll be getting into that towards the end as a little bonus. No limit on funding. ERC is not a loan that doesn't have to be paid back. So that's a great part. And you can use those funds you get as you choose. And you're going to see why it's so vital to go through this process and why you're missing out big time if you don't take advantage of claiming this for the employees you can get for those quarters. The ERC is a refundable tax credit, and then we'll see the IRS tax code shortly. 6,000 plus businesses reached. Over 1 billion credits have been recovered. You can see that number, and it's continually growing. Over 108,000 employees have qualified, credits recovered in all 50 states. You can see that pinpoint. Down here, why ERC specialist, dedicated to ERC. No need to be the guinea pig for your CPA. We average 10 to 20% more funding than a CPA not familiar with the program. And again, I have more details here. We're going to go through the application process. Maximum funding. We evaluate your claim in every way possible to ensure we maximize your credit. Lightning fast results. Our streamlined processes allow for faster results, which means faster funding. And it is proven. I've seen it gone through. Audit support included. If you get audited, we will supply all criteria and assist in responding to the IRS. So that's part of the step-by-step process. Once you submit all the documentation, your application, it's ready to go, it goes to the IRS. We'll get it there for you, and you'll hear back and so forth. ERC Program Specialist. Our team strictly focuses on ERC, allowing us to be the experts and resulting in more funding for your business. So where you would have been given only for 8 employees qualified for a specific quarter, we were to get you 15 of those. Now it depends on how many employees you have, you were able to retain for those quarters, etc. But where you were possibly going to get 100,000, now you're getting 150,000. And that's a huge difference when it talks about, hey, your payroll, one thing, how you're using those funds moving forward to help you build, grow, expand, and even get out of a tight pinch. It goes a long ways. Cash flow, everything like that. It helps your bottom line in a lot of circumstances. And I've seen this as a business loan broker/agent who have been able to help a lot of people in a personal and even on a business level. And I will also, if you're looking for other ways of funding, have this form for you down below in the description where you can get the funding your business needs fast. Complete this questionnaire form below to get a personalized and customized email response for your best funding option and options. Plus, you'll get a free 6-step pre-approval lending checklist to get you approved for funding much faster without wasting time, days, weeks, months, and even years of sifting through old, outdated, even scammy, theory, fluffy-based information. This is up to date in the market, and this is legitimate. I'll show you that. And you can literally fill this out in less than 30 seconds if you have everything there about us. Some of the services, I have many more. I just put a limited amount there. The key benefits of going through myself here at Viral Funding Solutions. So it'll look like this more or less. It could change over time, but that I could also include the employee retention credits as part of emailing you back. And it's going to be very well broken down. It's very thorough, in-depth, from introduction all the way to conclusion. In the body of that, you're going to get the services, qualifications, how they work, the numbers broken down, bonus tips, bonus material, bonuses, conclusion, recommendations, what I would do, how to get a hold of me. So I'll also add on the employee retention tax credit on top of one of those solutions you can look at. So that'll be down below in the description for you to check out. Professional support, although our process is quick and painless, when you have questions, we have answers with a dedicated team of ERC support specialists. Begin qualifying, ERC qualifications. Let me run through these, and I have more notes here. While the general qualifications for the ERC program is simple, the interpretation of each qualification can be complex. Our significant experience allows us to ensure we maximize your qualifications that may be available to your company specifically. Full or partial suspension of business operations, a government authority required partial or full shutdown of your business during the 2020 or 2021 year. This includes your operations being limited by commerce and ability to be able to travel, or restrictions of group meetings and so forth, supply chain issues, as we just mentioned earlier. Gross receipts reduction. Gross receipts reduction criteria are different for 2020 and 2021, but are measured against the current quarter as compared to 2019 pre-COVID amounts. So we'll see a little bit of that going through the application process. Customer testimonials, you can see that, what our clients are saying. Yay, ERC worked with us at Northtown Auto Liquidators and did a great job. Kevin here, it is my pleasure to share with you my great experience I had being a customer of ERC. The cleaning authority, after spending uncounted hours trying to figure out employee retention credits on their own, and they went about how they were able to finally get help through myself, the ERC specialist. Abdallah, very professional and efficient on getting things done. Highly recommend. And then we'll get into the frequently asked questions here in a moment. But I also have some notes here I want to go through before I show you the application sequence. So please bear with me. This is well worth your time. So this is not the income tax credit. So this is separate from that. Over here, 941X, as we spoke about, you want to amend for each quarter. Credit pays you for 50% of your 75% qualified wages. Eligibility, we already went through what that would mean. So 2 ways really to qualify. On top of what I mentioned, you want to have a 20% drop in revenue in the last 3 quarters of 2020 and on compared to 2019, or the first 3 quarters of 2021 that is then compared to 2019, a 50% drop in any quarter in 2020, 20% drop in any quarter of 2019, you can automatically qualify. If not, there's a secondary rule, as we went over earlier, the government mandate, the restrictions, partial or full shutdown, and what you can expect there. And I have a few more things here. So I'll cover that in the FAQ section. I want to make sure that I leave that. Let me look over here very quickly to make sure. So let me cover this part right here for the 26,000. For every employee you paid wages to, and if you qualify 2020, you can qualify for a credit up to 50% wages paid to employees up to $10,000 of wages. You can get a credit of $5,000 per employee in 2020. In 2021, you can qualify for a credit of up to $7,000 per, and that's dollars, per quarter per employee. That's equal to 26,000 when all the math is put together. So let me see, make sure I covered this. Got it. Now let's go over some of these things and I'll show you the app sequence. The ERC Summary Table, it'll be right here. And again, everything like this will be down below in the description for you to check out. So the ERC Summary Table, time period from 2020 to 2021 of Q4, March 13th, 2020 to December 31st, 2020, the time period. And then you can see there, what would it be respectively from Q1 to Q2 of 2021. And it says if we were started after February 15th of 2020 over that, there's a startup recovery program where you can get up to 50,000, but it's not over. So even if you were before that or after that, you want to make sure you go through the 26,000, and so you're not capped out at only 50,000. And we'll go over that in a moment even more. So credit rate, 50%, 70% for these quarters of 2021 all the way to so 2021 quarter 4 NA, not applicable. 2020 max credit per employee, that's $5,000 per year. And then in 2021, this is where it changed and it went up, where it was $7,000 per quarter. So you can see a $2,000 difference. Excuse me. So small employer, 100 full-time employees and less than in 2019, 500 full-time employees and less in 2019. And that's where I spoke about earlier with 500 or less for these full-time employees. Revenue qualifier, 50% gross receipts declined versus 2019, same quarter, as I said earlier. And then for 2021, 20% gross receipts declined versus 2019 or 2020, same or prior quarter. Employers that did not exist in 2019 can use 2020 revenue numbers. Partial or full suspension qualifier. The operation of a trade or business is partially suspended if a government authority imposes restrictions on the employee's operation by limiting commerce, travel, or group meetings due to COVID-19, such that the employer can still continue, but not all of its typical operations. I saw that a lot in all industries, specifically dentists. I don't want to get into the specifics of that, but a lot of stuff they were restricted from being able to do with customers and so forth. Governmental orgs, none. Public colleges, universities, organizations whose principal purpose is providing medical or hospital care, certain federal instrumentalities like credit unions. Recovery startup business, none for the 2020 and quarter 1s of quarter 2 of 2021. Business, okay, so this is where we get into the quarter 3 and quarter 4 of 2021. Businesses beginning operations after February 15th, as I mentioned earlier, of 2020, qualify regardless of revenue or shutdown orders, but the max is 50,000 per quarter. So you're only limited to those quarter 1 and quarter 4, 50,000, as opposed to if you were eligible before that date, then you have more you can get. Can claim PPP and ERC? Yes, from 2020 to 2021. So if you got the PPP too, you can also claim the ERC, and there's like no reduction of that. But you don't want to double dip, and I'll be getting into that shortly as part of like the FAQs. But let's go back to the home page and then try this application sequence. And I can also help you go through it if you need any help with it. But let me move down here. So industries, restaurants, bars, gyms, dentistries, hair salons, the list goes on and on. So it's not just limited to those. So see the IRS tax code. We can go into that shortly with my other pages that I've opened for you. But let's move over to begin qualifying. You can also click up there, but it'll be throughout when you scroll. And we'll get to the frequently asked questions toward the end. But let's start by clicking on begin qualifying. And it'll bring this page up for you. If you have multiple companies to qualify, please input and qualify each company separately. Okay, so you want to do it separately for each of those companies you have. And I know a lot of us have multiples like I do. So company name, and I'm going to do a test here. So I'm going to just put, my details, and just quickly did that, change that up, but I just wanted to leave it at that. And then, want to put your original or your email that you're using for your business. And I always recommend having a professional email address. You can get this through Google Workspace, various ways, but it also helps for building business credit if you're that business owner who's trying to or has been stopped, unsure of where to move forward. There's a lot of things that come with building business credit, but I'll leave more video information and content for you down below. But I would get started with this, as well as you have the questionnaire form that is not an application, where I'm going to analyze and evaluate and give you a proper response back on what those options are. So there is that. Could have even put full name. You could have put test there if you wanted to. You could have put just test here. Let's just try that out. And then estimate your potential employee retention credit amount. The amount calculated is based off an average claimed if you were to qualify for all 6 quarters of the ERC program for each employee. Okay, note, this is for the estimate purposes only. Exact employee count is not necessary. We will calculate your actual credit off payroll documents submitted. Again, it's a payroll tax credit. And so it's very important you go through one of us, the ERC specialist, because it can be a bit complex, these formulas, getting it down to precisely what you're qualifying for, especially when we're just not looking at decreases in revenue. If it's that or something else, supply chain issues, partial or full-time shutdown, which can also event to reduced wages, revenue, gross receipts, annual gross sales, etc. So average full-time W-2 employee count. So what I want to say before this is if you're self-employed, we're not going off of 1099. You have to have employees for this to count. So W-2 employees, okay, those forms, the tax forms, not the 1099. Independent contractor, self-employed. If you're self-employed and as an employer, you have employees under you, then that's a different conversation. Perhaps you can. So average full-time W-2 employee count in 2020. So I'm just going to put a random number here. This is by no means going off of what I have, just putting random numbers. And I could do it precisely, but I want to just put something in here that's random. Let's go with 70 there, or let's do this. Perhaps 80. Maybe you were in a recovery stage and now you had more employees, but let's just do this where you had 10 less. So potential ERC credit, $1 million, 128,500. That is the potential ERC credit before it has been readjusted. You'll see this a lot of cases, not only with the ERC program, but with any other business funding, cash out advance, business loans, unsecured lines of credits, unsecured term loans, even backed up by collateral. When you go through these online application sequences, and there, for the most part, a lot of them are very safe and secure. This one is. That's why it's very important you go through a broker / agent like myself who can help you understand the application process, what to expect, what do you have to upload, what documentation, you have to save a link, how do you refer back to it, what would happen in each part of the process, when will you be presented with your offer, what happens. I know all of this because I've done it for a long time, and I know how to predict things. I know the psychology a lot of the times why people don't move forward, why they get stopped, why they kind of just go ghost. They're not accountable, not punctual enough. But I'm going to help take care of you in a personal, as a human person first, and then business second. So potential amount, this is an estimate only based off the employee counts entered and does not represent a guarantee of the credit amount you will receive or that you will qualify for the program. So it's very important you read through this, not just skim through it. And again, you can rewind to go through this whole application process through me, and you can see how it works, as well as I can guide you through it. If you need help, I'll leave my email down below. But the best way is to go ahead and get started. This will show you everything you already need. And if you have any questions, again, please feel free to reach out. So qualifying questions, if you have multiple companies to qualify, again, it tells you how to do that separately, what to do there. Before you begin, and we're going to read through some of this because it is very important. This is why it's a lengthy video, and it is well worth your time. Before you begin, please read completely. Disclaimer there. The employee retention credit, ERC, is a robust, I want to say robust, stimulus program. Don't you feel that way when you see the word robust? You want to think robot? And it's much easier to say and much faster. Anyways, it's a robust stimulus program created by the CARES Act. That's where it's coming from. And this is through the IRS. This is not an SBA and how they did it there through the government in that regards. So this is the IRS that you're dealing through. This program offers employers, a significant refundable tax credit for retaining, as we said earlier, employees during the pandemic. The following questions only take a few minutes and will guide you through the process to determine if your business qualifies. It is essential that you read the questions thoroughly and answer them accurately as well as correctly. Please do not guess, estimate, or embellish, right? Make sure you have this. So it's important that you have some stuff in front of you before going through all of this. ERC Specialist utilizes your answers to determine which quarters we will file on your behalf. So again, just because you qualified for 2020 and 2021, it doesn't mean that every quarter you did. So it could be that you qualified for quarter 2 and quarter 3, but not quarter 1 and quarter 4. But then we look deeper and say, how many of these employees did you qualify for? What are the wages? And how much did you suffer, et cetera, and what can you qualify for? So ERC Specialist utilizes your answers to determine that. Once you submitted, your responses cannot be changed. If you qualify, we will send you a link to upload important payroll documentation, which will be required to precisely, and I'll go over what that is, precisely calculate your expected credits along with the answers provided in this questionnaire. We then conduct a thorough analysis to determine your credit amount. Once your analysis is completed and approved, our team will process and file your return. So I'm also working a lot of this on the back end with the specialists who are going to be submitting these documentations. So I will always be there to help you. And then there will be a part where the ERC specialists are there for you. And then you will be required to attest the information you provided is true and correct to the best of your knowledge. And don't manipulate anything. And I see this a lot with outside of the ERC program, when I'm helping a lot of businesses get funding through all services, they'll want to manipulate bank statements. They've probably been in a default, past default judgment, financial fraud. Don't do any of that. Don't put yourself in a position like that, especially in this with the IRS, and especially outside of this when you're dealing with other types of lending services. You will not ever be able to get that type of lending ever again. It just doesn't work that way. So please have the following information about your business available before you begin this questionnaire that I'll walk you through. One, and there's three of these: average number of full-time employees for 2019. A full-time employee is considered someone that works 30 plus hours per week. Let me highlight this in blue so you have no question. Now you know, as I said in the beginning of this video, I'm going to be getting into what qualifies as a full-time employee and why that's considered not part-time. So you want to pay on those qualified wages. And it's very important. We're working on 30 hours plus per week is considered a full-time employee. Average number of full-time employees for 2019. Two, your gross receipts for each quarter of 2019, 2020, and also 2021 included. And perhaps we're watching this 2023 and perhaps 2022 will then be a factor. So it might be more than just three. Total deposit sales, not including PPP funds. This is where you get into the double dipping. And I want to cover a little bit of notes there that I got. And let me see, I want to locate this. So you don't want to double dip with the PPP and ERTC, which is the Employee Retention Tax Credit. Same thing here, just a little bit longer. Don't use the same wages for both programs. And we don't want to have to look at those two because you'd be double dipping, trying to claim for that. What you did with the PPP, you put over here with the Employee Retention Tax Credit. So be ready to answer questions about government shutdowns that may have impacted your business. An example of a qualified shutdown would be if your vendors, experienced shutdowns and you couldn't obtain critical goods. ERC Specialists, and this is in small writing, make sure you see this. Specialist LLC does not provide any legal, tax, or financial advice, and users of this website should consult with their own lawyer and CPA for legal, tax, and financial advice. So make sure you speak with them directly for those subjects. And I don't want to get into all that in this video on accounting, but I have some accounting videos and software programs if you haven't taken advantage of. I'll try to link to you down below. I've done reviews on these, how I've used them myself in my own business and my businesses. But I won't get into the legalities and talking to you about why an LLC or an S Corp is better than an LLC and how to help you live the life you want to without having to overwork yourself and having extra when you retire. And I'm not going to be getting into that, but you want to consult that with your CPA. I know this for a fact because I've done it myself. I don't know how all of this works. So I may have some information later on in the future for this, but let's go to next. Did you pay any W-2 wages in 2020 or 2021? The ERC credit is calculated as a percentage of W-2 wages paid. 1099, as I mentioned earlier, wages do not qualify. Note, the wages of majority owners over 50% and their immediate relatives, even if paid W-2 in this circumstance, do not qualify for the ERC program. Wages for all other W-2 employees will still qualify. So let me read that again. The wages of majority owners, if you're over 50%, and their immediate relatives, even if paid with W-2, do not qualify for the ERC. Wages for all other W-2 employees will still qualify. Did you pay any W-2 wages in 2020 or 2021? We'll go ahead and select yes there. When did you start your business? Select the answer below. So we talked about how there's still a possibility of being qualified for the startup before or after February 15, 2020. So let's just select here February 15th. And this one could be capped up to 50,000 as we heard earlier. Before February 15, 2020, how many full-time employees did you average in 2019 is the next question based upon those that you selected. A full-time employee is classified as someone that worked at least 30 hours per week or 130 hours per month. You do the numbers there. In 2019. Remember, this question is based on the average amount of employees during 2019, as emphasized in the sentence before. Important, if you own over 50% of multiple companies, the IRS aggregate rule requires you to combine the full-time employee count of all companies, this is all may have, that you were a majority owner of during the 2019 year for this question. Example, the business owner was the majority owner of ABC Company, which averaged 50 full-time employees in 2019. The same business owner was also the majority owner of 123 Company, a separate one, a separate identity, a separate LLC, etc., which averaged 75 full-time employees in 2019. According to the aggregate rule of this, the employee count of both companies must be combined for the ERC program. So you would want to combine those two amounts. Although both companies can be entered for the program, they would be classified as over 100 employees, as you just quickly could do the numbers there, 75 and 50. Note, businesses with over 100 employees but under 500 full-time employees in 2019 do not qualify for the ERC funds in 2020. We say that one more time. Businesses with over 100 employees, but you're under 500 full-time employees in the 2020 and the 2019 calendar year do not qualify for ERC funds in 2020. You're over 100, less than 100? Sure. Businesses with over 500 full-time employees in 2019 do not qualify for the ERC program. We said there was a limit on this, how many employees can have, except for actual wages paid to employees that did not work due to a government shutdown, which is separate. Part-time employees. Part-time employees' wages do qualify for the ERC program. This question only requires full-time employee count to determine qualification. So now you'll want to select the answers below based upon what you read, and you have more clarification how to answer this. So it's not like you're going through it and you're saying to yourself, I'm stuck. How do I know? And I know how many, but what would this do as a result? You're always asking yourself an outcome-based solution when you're going through these questionnaires or application processes, right? You're always saying to yourself, what is the outcome of me putting this information in? Am I doing it correct? So now that you know what to expect and look out for, and this is what I had troubles with, so select the answer below. My business averaged less than 100 full-time employees in 2019. And if you know this straight off the bat, or you need to reflect and look at all this information, but based upon what we've seen here, do you know how to answer this correctly? Or take some time to look through the paperwork and see what you would qualify for. My business averaged over 100, but under 500 full-time employees. So as we mentioned here, businesses with over 100, but under 500 full-time employees in 2019 do not qualify for the ERC funds in 2020. So if you were to click that one, that would be the truth. And this, if you clicked it there, then you wouldn't be qualified. So let's go with my business averaged less than 100 full-time employees in 2019. Why though? Because if you remember in the beginning, I put 80 and then 70. So we're sticking underneath 100. So please be credible with this information you're inputting. So the employee retention credit qualifications options. The following screens will present 3 different ways that your company can qualify for the employee retention credit. Please answer these questions in these 3 sections to determine your eligibility for the program. Next, qualification option 1, revenue reduction. The most straightforward way to qualify for the ERC program is from a qualified revenue reduction during the qualification period of that program. So again, like I said in the beginning, it's not all, but it's a huge emphasis that can really help. And decreased revenue is just one portion. Again, like I said, supply chain issues, full or partial shutdown, government mandate restrictions, and possibly more that we can look at. But this is why it's important that you go through this and not just go to your CPA and have them look at it, because they'll just a lot of the times look at the decreased revenue gross receipts and base it off of that and say, I've had a lot of people actually come to me and say, well, my CPA said I don't qualify. Well, not exactly true. And they may have not looked at it from 2019 to 2020. What are we in now? 2022, 2021. What were they looking at precisely? And so they weren't looking at everything. And there's some stuff that can be complex. So it's best that you put it in the hands here. So over here, the revenue reduction requirements are below. ERC revenue reduction qualification. 2020, 50% reduction of gross sales for 2020 quarter as compared to the same quarter in 2019, as I mentioned earlier. And I said we would be going through some of those. When, if the revenue reduction in 2020 gets back to 80% of the 2019 level, the qualification ends. For the year 2021, 20% reduction of gross sales for the 2021 quarter as compared to the same quarter in 2019, or 2020 if you were not in business during the quarter in 2019. The alternative look back option allows the business to use the previous quarter compared to the same 2019 quarter to qualify. So you can see a massive difference from the year 2020 to 2021. Now it's only a 20% reduction in gross sales for the 2021 quarter, as opposed to 50% where you may have not qualified for that or not enough of it. So note that for any periods you qualify for revenue reduction will request profit and loss statements to substantiate your claim. Click next to below to begin. Where your gross receipts, total deposits, what we're looking at, it's gross receipts, in other words, total deposits. And this is also stuff that I look at like when I'm dealing it as a broker / agent, especially when people submit to me their bank statements, possibly their tax returns if necessary, depends on the type of funding program. I've also come out with SBA review videos like the SBA 7A program. That may be something you look at and what would be needed, and I can talk that over with you. But again, that questionnaire form, like I said, to get in contact with me so I can help you in a more personalized and customized way. So where your gross receipts, total deposits for at least one quarter in 2020, less than 50% of your gross receipts for the same quarter in 2019. So let's just put yes there. Next, which 2020 quarters were down 50% of gross compared to 2019? We'll say quarter 2 and quarter 3, but not quarter 4 for that. 2021 quarter 1 revenue qualifier. The 2021 credits are the largest in the ERC program with up to $7,000 per employee per quarter. That's what I said earlier, how much, and the $10,000 with the $7,000 per quarter, how all that ends up coming out to be $26,000 per employee. So it's for the 2021 calendar year. Please answer which qualifications apply to your business. Make your selection below, asterisk, that means you do have to answer this. I won't let you go. My quarter 1 2021 gross revenue was 20% lower than quarter 21 of 2019, or quarter 1 2020 if not business in quarter 1 of 2019. This does not apply to my business. So we'll just do the first one. You can put this does not apply to my business. That's okay. You can click that one as well. 2021 quarter 2 revenue qualifier. The 2021 credits are the largest in the ERC program with up to $7,000, we mentioned before. And so now here's another selection. My quarter 2 2021 gross revenue, and now we're in 2021 here, was 20% lower than quarter 2 of 2019 for quarter 2 of 2020, if not in business in quarter 2019. You can also put this does not apply to your business, which is fine. So there we go. Quarter 3 revenue qualifier. The 2021 credits are the largest. We went over again just so you can hear it out. I know what it says, but make your selection below. My quarter 3 now, all right, 1, 2, 3, quarter 3 of 2021 gross revenue was 20% lower than quarter 3 of 2019 or quarter 3 2020 if not in business in quarter 23 of 2019. And you can also put this does not apply to my business. We'll click that and we'll click there. Qualification option number 2. This is the supply chain disruption. Supply chain disruption is a common qualification for businesses that rely on vendors and suppliers for their business to function properly. This qualification must have resulted from a government suspension order to your supplier that resulted in the supplier not being able to deliver the critical goods, but may continue beyond the original suspension order. The specific requirements for this qualification are listed below. These impacts qualify a company regardless of revenue gain or loss. Okay, regardless, you just saw that there in bold. Please reference the IRS notices pertaining to supply chain disruption, notice 2021 and 2021 and 2020. You can click there and it'll bring you to those pages in a separate tab, as you can see there. We'll click this one here as well, so you can see that shortly. ERC supply chain disruption qualification, more than normal nominal impact. The supply chain disruption must have resulted in more than 10% impact on your business. This can be directly from the reduction of sales from the inability to procure, excuse me, been in here for quite some time, or from the impact not being able to procure the item had on your business. To calculate the more than 10% impact, evaluate the impact of the supply item on your 2019 gross receipts. So you want to look at it from there. For example, if you were not able to procure pallets for the shipping of goods, consider how much of your business relied upon pallets in order to operate in 2019. If it was more than 10%, this qualification can apply. No replacement supplier, as you see here. The business must not have been able to find a replacement supplier for the supply item affected by the government suspension order. Click next below to provide the details regarding any supply chain disruption, if any. So did you experience it during a COVID government order suspension on your supplier? The cumulative impact of the disruption supply items must have directly or indirectly represented more than 10% of gross sales in 2019. This does not mean that your revenue must have decreased to use its qualification. If, as we mentioned earlier, if you were able to find a replacement supplier that resulted in less than 10% impact on your business, this qualification does not apply. So you would answer the question, did you experience a supply chain? We'll just say yes for the purpose of this, and then show you what happens, and then I'll go back to the no. So how many types of supply items were you unable to procure during due to the supply chain disruption? List the specific materials or any goods, and we'll just say like 4 for this example. And you'll want to list every supply item. 1, supplier of that item, and in what state the supplier of that item was located, of number 1, and then 2, 3, and 4 for each and every one, in what states, and which 2020 quarters was your business impacted more than 10%. And this is kind of like the same question we asked in the beginning. You will answer which quarters it was impacted, if any. In which 2021 quarters was your business impacted more than 10% due to cumulative impact of these disrupted supply items? This does not mean revenue must have decreased. So it's a difference. So this might have been quarter 3 or quarter 1 or quarter 2 and quarter 3. And this one may have just been quarter 1. My business, when it's not able to find a reasonable replacement supplier for any of this, agree, and it'll help your case. But again, we're going to just skip that out. And we're going to go to next here with no. Qualification option number 3, partial or full suspension. The partial or full shutdown qualification is based on a suspension test to demonstrate that your operations were partially or fully suspended due to COVID-19 government order. Keep in mind, a government restriction may have a direct impact on your operations, even though that shutdown order wasn't given to you directly. Important. This qualification only applies during the period of the actual government the government order, excuse me, as well as the shutdown. So since there were few government shutdowns orders during 2021, this qualification mainly applies for the 2020 quarters. And you can please refer to the IRS notice pertaining to suspension qualification right there, and it'll give you a little link. So I would always advise to click that and come back to it and reference it. ERC4 are partial suspension qualification requirements. More than nominal impact. The partial suspension from a government order must have had more than a nominal effect, which means what? It affected more than 10% of your business's operations. This impact can come from a reduction in business hours of 10% or more, or a suspension of your business operations that represented 10% or more of gross receipts as compared to 2019. So a reduction in business hours, as we're seeing, can be as part of that forward partial shutdown. This does not mean that a 10% reduction in sales is required to qualify. So this is the difference here with decreased revenue. But the order must have suspended at least 10% of your revenue producing operations, okay, business operations. Hourly example, government orders required a restaurant to close 2 hours early due to curfew requirements. The 2 hours represented 15% of the business working hours. This business does qualify for the period affected for that government order because it's over 10%. Gross receipts example, government orders required a radiology clinic to stop elective procedures during quarter 2 and quarter 3 of 2020. The business reviewed their gross receipts for quarter 2 and quarter 3 of 2019 and determined that the suspended elective procedures represented 18% of their total gross receipts during those quarters. This business qualifies for these 2 quarters. It's fun. I know some of you guys are like, whoa, that light keeps coming in and out. I'm here in Vancouver, Washington. If you didn't know, the weather here can be very bipolar, especially during the springtime, going into summer. It has been raining yesterday, it rained hard at night, and then it would just clear out and some sun would appear, clouds, overcast. Can be strange. So inability to convert to telework. Or let's go back over here. Gross receipts example, you got to see, just quickly summarizing there. The business reviewed their gross receipts for quarter 2, quarter 3 of 2019, determined that the suspended elective procedures represented 18, of their total gross receipts during those quarters. This business qualifies for these 2 quarters. Inability to convert to telework. If the business was able to effectively convert to a remote work environment that mitigated the nominal impact on the business, on your business, they do not qualify for the suspension qualification, full or partial suspension IRS examples. Example 1, an employer, such as yourself, that operates an essential business is not considered to have full or partial shutdown if government orders allow them to remain open. However, an employer that operates an essential business may be considered to have a partial suspension if more than a portion of your business operations are suspended. Example 2, we're right here, just in case. The partial suspension qualification applies if employers could not obtain telework capabilities that allow their business to operate as usual, adequate IT support, etc. It also applies if the employee's work was not portable, or the presence of having an employee in the physical workspace plays a critical role. Example 3, if an employer's workspace is closed due to a government order for certain purposes, but the employer's workspace or workplace, is well the same, may remain open for other limited purposes, the employer's operations could be considered to be partially suspended if more than a nominal portion of the business cannot be performed. Example 4, last one. A restaurant must close on its on-site dining or every other table due to government orders, but can still operate its drive-through or carry-out service. This will be considered partially suspended. I've seen that in a lot of cases, not only with restaurants, but many others. Note, for any periods you may qualify for, you will be required to provide a brief description of more than nominal effect on your business to substantiate your claim. So now we can click on next. Did you experience a full or partial suspension due to a COVID government order? The cumulative, okay, in bold there, effect of the full or partial suspensions must have had a more than 10% impact on your business operations when considering the gross receipts of the portion in your business in 2019. This does not mean that your revenue must have decreased to use this qualification. As we just saw earlier, some of the examples at 50%. Make your selection below. We'll select yes for that type of suspension. And if you had no there, we can also do that in before, but I'm going to show you this and we're going to move forward with this one. So we'll just say inability, reduction to capacity. We'll just select that one. Put test there. Do have another suspension to claim? Then you can, again, like I said, you would want to claim it for those each. In which quarters were you impacted by these suspensions? Okay. Next there. So ERC qualifications results for my specific business. Congratulations, based on your responses, you qualify for the below quarters. Depending on your qualifications, you will see your substantiation statements below. These statements will be retained to substantiate your claim with the IRS. So what did I qualify for? And you would possibly have a different result. It's kind of like when you go through a quiz, right? Selecting answers. And then at the end, you might have to submit your name and email to get the results, or it might just show you that right away. This is similar. 2020 total quarters qualified from quarter 2 to quarter 4, but I didn't get to quarter 1. In 2021, same amount, 3, but this one I do qualify for quarter 1, quarter 2, and quarter 3, but not quarter 4. So that. Full or partial suspension substantiation statement. The statement below is for the first suspension only. The statement will be identical with the specific details for an additional suspension. Under the facts and circumstances, my business name here is claiming the employee retention credit for 2022 quarters, and I just went over which ones, 2, 3, and 2021 quarters 2, 3, due to a government order that resulted in partial suspension to their business that caused a more than nominal impact. So this is for the partial or full suspension. The resulting suspension impacted my business name due to reduction in capacity. The specific details of this partial suspension are as follows. And I just put test there really quick. In 2020, how many W-2 employees did you average? Did it change? If so, you might have a different number there. Estimated 2020. So we use these employee accounts to provide an estimate of your possible credit upon qualification. Note, this is for estimate purposes only. Exact employee count is not necessary. As we said in the beginning, we will calculate your actual credit off your actual payroll documents that you've submitted, 941 and 49, etc. So estimated 2020 credit amount, 320,000 there when everything's been readjusted, as we went through. Yours might be higher, lower, depending on where you went. In 2021, we'll leave it the same. It's going to ask you the same stuff, but it's less now, 269,500. Great news. And then my business name. Based on your answers, you do qualify for the ERC program. Yay, great. Now, your total estimated credit amount is $1,128,500. Now that is insane. Combining amounts. Note, this is an estimate only based on the responses and employee counts provided and is not a guarantee of your credit amount or qualifications. Many factors are evaluated during your ERC analysis, and if we determine you qualify, this number can be much higher or lower. So just think about that. Just imagine you qualify for $1 million, but now you're 2 million, 3 million, even less. You're still getting qualified. Important, before continuing, please add support at ercspecialist.com and processing at ercspecialist.com to your email safe sender list, or you may not receive communication as your ERC credit is processed. For instructions, you can click here and it'll bring up an open tab. Email whitelist instructions. So you'll want to open up that tab, Gmail, Yahoo, Macmail, etc. So what you'll want to do, and we'll probably go over that at the end, but it's very important you do. And what I recommend every person that I've worked with in the ERC program is have your own file. Like a Google Doc is one thing, have a Google Drive, Dropbox, a folder you can put into your documents, you can quickly access, but that's where you have all your documents. And then you have any necessary supplemental documentation that's possibly necessary, or like these tabs that I have open for you, you click open, you can somehow save it to your drives. You can go ahead and save the PDF format, or just save the link and then put it in a specific notepad so you can get access to that, and then move that over to a folder, etc. However you decide you want to go about that. But it's very important you do that. Company name, and I already had done a previous example of this. So it's kind of already populated, but it may populate when you do or not. So email, that's mine. Phone number, please just don't call me out of the blue now you see that. Job title. Owner. If we saw earlier, job title, business owner. So CEO, CMO, CFO, company address, and who are you referred to? What industry are you in? So let me put, see if it works like this. So otherwise, I don't mind showing you guys, just make sure. Who introduced you to it? You just put on, you can put my name. At the end, you want to do this. So my name is Michael, last name Granados. And I'll even be really truthful with you guys and put my middle name. Michael Anthony Granados would be the full. So you just put first, last name, which is suffice if you saw there. Optional, email of the individual that handles your payroll. We will email them a copy of your document uploaded link, example at example.com. You want to be able to do that. So let's see if this works. Yeah. So it'll also show you the errors. See errors on this page before moving forward. Let's see. Restaurant. Okay. Now, once you submit that, with everything being accurate, again, be accountable and responsible for that. Please follow the instructions below to upload the required documentation. We ask that you upload your documents within 24 hours to expedite your ERC analysis. If you need to return to this page, please use the link that was emailed to you. So it's very important that once you pass the stage or the stage before that we went through, go through your email links, spam folder, inbox, promotion, social tab, but don't just stop at one. A lot of people, especially when I'm helping them with these questionnaire forms, sometimes it'll land in the spam box, a lot of times in the inbox. You might have more safe and secure settings, proxy settings, IP blocks, and stuff like that that prevents it from always landing in the inbox. So take the time. Important, please read. Due to an extremely high volume of customers are using our services, correct documents must, and highly emphasized in bold, must be in caps locks, must be uploaded for us to accurately and efficiently claim your credits. Please ensure you follow the instructions below to provide the information required by the IRS. Providing inaccurate or incomplete documentation will lead to a significant delay completing your filing and or reduction of your credit amount. So you don't want to, one, not get filed, not get looked at, and then you're wondering, what they're not getting back to me, or well, there's a reason why. And this is a lot of the times what happens with the EIDL loans is owner verification, credits wasn't eligible, helping them get eligible, characteristics, the character, stuff happening in the background, and much more, industries. And so a lot of people had to submit a 4506T form, then it's submitted in time. They had to redo it. The supplemental documentation, the tax wasn't correct. It just don't go through that and then come back to say, oh, I got to start this again. I got to supply that. And then you're having to start from scratch and so forth. So, and cause a reduction in your credit amount. Company name. Please ensure that the company name listed below matches the company name used during the qualification before uploading. And yes, it does. Detailed payroll report. A detailed payroll report outlines all payment deductions. And so this is what will be asked of you in the documentation process. And I have my notes here just to make sure. A detailed payroll report outlines all payments, deductions, contributions, and taxes for each employee for each paycheck during your ERC eligibility period. We use this information to maximize the ERC funds we are able to claim for you. Instructions. To calculate your credit, our team of analysts need 3 items for each check paid during the period listing below. Gross wages, check date, and recipient's name, the employee name. See the image below showing the items required. Important. Please ensure your report includes terminated and inactive employees also. So this is from 3/1, March 13th through September 30th, 2021. Okay, it was all being looked at. Employee name. And then you see from column and rows down, rows, what is being asked for, check date, gross wages, Tom Smith, 3/13/2020. And then these are in it for the April 1st of 2020, and gross wages for each of these employees. For payroll report instructions, select your payroll provider. You have from QuickBooks Online all the way down to other. So you would want to choose the one you have. Might be QuickBooks Online. There are a lot of different accounting softwares and more benefits to these that if you need help with, I've done review videos, like I said, I'll link to you down below. How to download the correct payroll data from QuickBooks Online. And it'll show you here. Look, if I answered this one, then it'll show you what to do, how to move forward. Log into your QuickBooks Online account, navigate to reports and click on reports, which I've done plenty of times. Scroll down to the payroll section. Maybe you've seen this too. At the bottom of the page, select payroll details under that. So I won't go through all that, but it'll show you what to do. And then number 9, save the Excel files and Excel workbook name, business name, _, date, range. Common questions about payroll report. What constitutes a payment to an employee? Hourly wages, salary wages, reimbursements, tips, stipends, allowances, essentially any payment you made to the employee. What deductions, contributes needed to be included in the report? We need to know all about deductions or contributions. Deductions and contributions affect taxes differently, so we need to know the amounts for all of them. This includes health insurance, dental insurance, which is included in all those payroll, AD&D, life insurance, child support deductions, etc. Payroll report upload. So you want to click that and it'll bring up the screen for you to upload them with your files. Majority owners. Please list the names of majority owners over 50% and their immediate family members, spouse, children, siblings, parents, aunt, uncle, niece, nephew, step relatives contained in the payroll reports. It's very important you list that. Don't want to not include someone. Please enter none if this does not apply. So you may not have that. Click there, but the field is required. Family members of majority owners do not qualify for ERC credits, similar to what we were mentioning earlier. Federal 941, 943, and a 944 forms. To assist in calculating your credit, we need the federal forms filed for your payroll. Please upload the applicable federal forms for, listen carefully, 2020. This is quarter 2, not quarter 1, quarter 2, 3, and 4. And for 2021, quarter 1 now is being asked for, quarter 2, and quarter 3, as we talked about from the March 13th all the way down to September 2021. So you can see why the November and so forth not included in that. But quarter 1, quarter 2, and quarter 3 for 2021. Please also include any 941X forms, which I'll be showing you how that looks during the, and you see it on screen there. During this period, if you took the OTC Work Opportunity Tax Credit or the R&D Research and Development Credit, please also upload this information. So that's why the 941X is a revision, and we need to see if you've taken that as well as more. Browse files, you can see how it looks like that on the right side. PPP loan information. Note, if you're currently applying for the PPP loan forgiveness, please select 24 weeks for loan forgiveness. So did you receive a PPP loan? Yes, draw 1. Yes, draw 1 and 2, or no. All right, so it might be one of those. And if you selected that, PPP loan 1 amount, how much did you receive? PPP loan 1 date received, and be accurate with this because it was always double checked and looked at. PPP loan number 1, how long did it take you to meet the forgiveness requirements? And so if we did that, now we have a little bit more to add. No, okay. Well, I'm just gonna leave it at no for now. Not saying that you didn't. Company authorized signer information. And this is one thing, if you try to leave the screen, like I didn't intend to, but I scrolled around with the mouse. If you need to finish your application later, please click on the link that was emailed to you. If you did not receive an email, please contact us at support@ercspecialist.com. And I said that earlier. You'll want to save that. Authorized signer full name. First and last, authorized signer email, authorized signer title, current company mailing address, and then submit. Secure SSL encryption. Our upload portal and your documents are 100% secured and encrypted. So you don't have to worry about somebody accessing this that shouldn't, somebody hacking. No, it's very safe and secure. It's very protective. I've seen how all of this works, so you don't have to worry about it. So that'll cover what you'll want to do to submit it. And now let me go over some of like the supplemental documentation as in time it would take. So what would happen is it's going to be evaluated and analyzed, and we'll find the maximum allowable credit to get you back for you in 2 to 3 weeks. Follow-up in 2 to 3 weeks. And this again, it's the IRS. I know it's not a business loan or how it was with the possibly the EIDL, but it takes a little bit of time, especially with all the people taking time to submit this and the processes with the IRS. It's understandable why it takes that kind of time. So step 4, we went through, you will send all your documents with the form, signed file for your ERC with IRS, and then the specialist, we will all go through this. We'll file this with the IRS and amend the 941 and anything that needed to be supplied. You can use the funds for any purpose and not have to be paid back. IRS takes 6 to 7 months to process these returns. Okay, just know that, but you have 2 to 3 weeks to get a response back, approvals and all that, how much. So it's well worth your time to take it, even though you're looking at this and saying, well, I don't want to have to supply all this documentation. It takes a little bit of time. But if I'm being quite honest with you, you have to think about the return on this one investment that you're putting time and return on the investment that you're getting in terms of that tax credit. And there's so much to be said and why it is very important for you to get these funds. And so let me look over here, see if I didn't miss anything. Want to make sure that, yeah, okay, I covered that. But just understand that how much you can get, 10,000 to 7,000, you can get a credit of 5,000 per employee in 2020. In 2021, you can qualify for a credit of up to 7,000 per quarter per employee, total of 26,000. And that's added with the 10,000 that I didn't get into too much, but I said that earlier, but it is going to be well worth your time. Just imagine getting these funds. You can use however you want. You're getting it back. You don't have to pay. And so perhaps you're like, well, I was going to go get a cash advance. I was going to get a business, but now that this is available, But you may still want that because that may take faster to get you funding. You might get a limited amount here and then find out that you get more over here with the ERC program. So now you're being able to add, and that's a huge advantage to all of this. So let me go into, you already know you have to file 941 for each quarter to qualify, 941X, the revision. Main issues with the 941X is when you claim your credit, you have to split it with the refundable piece and non-refundable piece. Refundable versus non-refundable. You go to 941X instructions on its website and provide a worksheet called Worksheet 2, and we'll walk you into how to calculate the refundable and non-refundable piece of the ERC credit. The worksheet will tell you the lines to put it in. Worksheet 2 for 2020 and 2021 for quarters 1 through quarter 3. Don't double dip. We went over that. 6 to 7 months to receive the funds, and even sometimes up to 12 months. I've seen some individuals. IRS says we reviewed your 941X. Can't submit a 941X electronically. Physically mail it in separate envelopes for each. So what you want to do, and what a lot of my clients will end up doing, is have a separate envelope for each one of those you submit the 941X. So it's all organized. It's not like you submit it all underneath one envelope, send it in, and you have different, you're going to get different email or different letters back, but you want to have everything all organized. So amend 2021 income tax returns if you get your credit in 2022. And let me make sure I didn't miss anything here. I know I have a few bits of details that I want to make sure I covered that I did not miss. And I'll go through the FAQs here in a moment. Amend 2020 taxes, 6 to 8 months or 6 to 7 months, up to 12 months in some cases. This is the IRS program, not the SBA. And let's go over here. I'll show you those forms in a moment. You can see on screen there. The Internal Revenue Bulletin 2021 through 11. And then this here, we have the new law extends COVID tax credit for employees who keep workers on payroll. You can read through that. The current revision through the 941X about the Form 9141X. I'll try to leave that out below. Adjusted employers quarterly federal tax return or claim for refund. So if we clicked on this, show you how that looks, and there's an instruction there you can click on. So this is what you'll see. Hopefully you can see that on screen. We saw a little bit of that, but an employer identification number, name, not in your trade name if any, address, and then read the separate instructions. That's what I would do, which is just below the form we just accessed right now. And then part 2, complete the certifications. Part 3, enter the corrections for this quarter. If any line doesn't apply, you can leave it blank. So while it may feel like it is a little bit more, just think about this. You already have your 941, so it might just be already as relevant that can be moved over to this. And if there's any adjustments, as we just mentioned earlier, what would be needed and what to look for. So this is the 941, the original one. Okay, so you can see there that not everything just transfers over automatically, but for the most part, there's a reflection of it, and anything that's been changed will be modified on that. So you can see that there. And then let's come back to this. And then I have a few questions in here that people have also been asking me, and then from my CPAs. So self-employed, not qualified, as I said earlier, self-employed don't have employees as W-2 employers, not 1099, that won't qualify you, as I said. What the employee retention credit program is, how you can get it, refundable credits, tax credits on qualified wages for those quarters. You do get approved for, and you may get approved for all. So including certain health insurance costs paid to employees. It's not taxable income, so it's separate from that. It's payroll tax credit. You don't have to pay it back. Reduction in gross receipts. It's just one case of many qualifications we went into. Who can qualify for? When it started, March of 2020. So 10 employees, if you did the math on some of that, how much you qualify for 26,000, 260,000 per employee for those quarters and so forth. Business operations, it started after February 15, 2020, the revenue startup. Probably 50,000 would come into effect there. So it's best to go through the ERC Specialists for the formulas, and the paperwork can be complex to go through, so you want an expert to help you along with this to give you a full analysis. No upfront charge. The only fee you get is from when you get approved for the ERC, the funds, or maybe a little fee there included when you're getting those. So when you receive your funds from the IRS, there could be a really, really small fee. Documentation, we went over that. 941 payroll tax returns. And I think I have a little bit more here, what you need, how you needed 3 years to look back on. And just give me about a couple minutes and we'll close up here. I do appreciate your time. I know this is a lengthy video. So you have 3 years again, like I said. I know I said this earlier, from the day you file your original 941 to claim the ERC for that quarter. Now let me flip back here and go to the FAQ. Let me try to open up a tab instead. So frequently asked questions, and we'll close up here. Do you have to repay it? No, this is not a loan. It's a refundable tax credit. When we file your ERC claim, we request a refunded check for you. How much do you charge? Our service charge is based on the percentage of the credit that's recovered. So that's at the ending stages. We calculate and provide our fee with our fee analysis, since we are typically able to recover 10 to 20% more than someone else less familiar with the program. So that's very important that you go through this, because you can get more. Our fee is very affordable, just like a good CPA. Using the right team for this process pays for itself. Can't I just have my CPA file? Why would I use the ERC Specialists? As I said earlier, we'll go into it even more. Of course, the challenge is the ERC credit is taken on your payroll returns and not through your business income tax returns, as I said earlier, which is what most CPAs handle. Because of this, most CPAs don't process this credit unless they process your payroll in-house. This is also a big reason why this credit is so underutilized. Since CPAs don't typically handle it and they are the tax experts, it has mostly fallen in a middle ground where a few are able to effectively process the credit. Interestingly, we receive a large portion of our clients from CPAs. At ERC Specialists, we have decades of payroll experience, which has allowed us to specifically focus to understanding and maximizing the ERC program. In our experience, we found that due to the complexity of the ERC tax code is over 200 pages and time investment necessary to understand the ERC program, very few are able to effectively maximize the sizable credit for your business. So ERC tax code is over 200 pages. You don't want your CPA going through all that, let alone they're going through business income tax returns. And they're not fully giving you a clear picture. Can I get ERC funds if I already took the PPP? Yes. The Taxpayer Certainty and Disaster Tax Relief Act 2020, enacted December 27th of 2020, modified the ERC's credit rules. One of the modifications included allowing a company to have a PPP loan and still take advantage of the ERC credits. However, you can't use the same dollar for dollar funds or double dipping. We take this into account when processing your ERC credit. My revenue went up in 2020. Can you still qualify? Yes. There are two possible qualifications for 2020: revenue reduction or full or partial shutdown of your business due to COVID-19. Specifically, the IRS describes this as a government authority required partial or full shutdown of your business or businesses during 2020 or 2021. This includes your operations being limited by commerce, inability to travel, or restrictions of group meetings. Below are several examples, as we went over this earlier. Example one: a restaurant must close or limit its on-site dining, such as having to close down every other table due to COVID-19 restrictions. So there are a few more examples we already went over, but you can look at them again if you need to, and they'll also be a part of whatever selected answers you put in that application. I'm a CPA or a payroll company. Can I refer my clients to your ERC Specialist? Yes, we also offer referral affiliate program. To learn more, contact us. Will the ERC funds run out? This is not a lending program. Tax refunds are issued by the U.S. Treasury. Therefore, all eligible employers will receive the funds. How will you make payment? We understand your refund check may not arrive for several months, 20 weeks minimum according to the IRS documentation. So we offer two payment options. You may pay your fee upfront at a discount, or the full fee can be deducted from your refund once received. That's what we said earlier. Upfront payments can be completed by credit card. Regardless, our fee is covered by 100% money back guarantee. If the IRS does not release the credit claim for any reason, we will refund any payments that you have possibly made. Good stuff there. I'm getting more in ERC credit than I paid in taxes. Remember that this program is taken according to payroll taxes paid, not on your income taxes. So payroll taxes paid. ERC funds not applied towards owed payroll taxes are treated as an overdeposit of taxes that will be requested as a refund check from the IRS that you could receive. As an owner, do my wages or the wages of any family member I employ qualify? So we kind of spoke on this earlier, but maybe Wages of owners who have a majority ownership defined over 50%, 51%, 50% above, do not qualify, nor do the W-2 wages of any immediate family members of that owner. In the case of an owner has less than 50% ownership, their W-2 wages qualify, as do the W-2 wages paid to immediate family members. Can I qualify for the ERC if I'm self-employed? I said this earlier. No, if you're a majority owner over 50% of your company, then your wages do not qualify. How long does it take to get your ERC credit? This is how the process works. You send us the required documents. I've shown you the process, and we process an analysis at no charge whatsoever. So don't worry about a fee being applied to that. That's free. The process from start to finish usually happens in 2 to 3 weeks. Very common. If you wish to move forward, you will select your desired payment option and we will file your claim. We take care of that for you. You don't have to go submit that to the IRS because that can be a little bit complicated. Once filed, refunds are released based on the IRS backlog. Currently, the IRS has stipulated a 20-week minimum turnaround on the ERC funds. So that could change. It could be less, it could be more, but that's what we're seeing just commonly. The ERC, excuse me, credit taxable. The ERC credit is not considered income for federal income tax purposes, but you must reduce any deductible wage expenses by the amount of the credit. Please provide the credit information to your CPA for tax purposes. So, have a question, you can reach out right there. And we have covered everything we needed to. Let me go over this. At contact there, blog. But we went over, just to quickly recap, what is the employee retention credit? There's a video there you can watch. And again, this is going to be linked to you down below in the description. Go ahead and get started. You got to see the application process, rewind back to it step by step, and make sure you're reading it very carefully. And up to $26,000 per employee available for 2020, quarter three of 2021, as we saw some examples going through it. Qualified with decreased revenue or credit COVID event. Hey, supply chain, partial or full shutdown, government mandates, restrictions put on your business or businesses, and so forth. And what percentage of it, reduction, and so forth. You got to see. No limit on funding. ERC is not a loan. ERC is a refundable tax credit. We went through the IRS tax code. You can also view that there if need be. The amount of businesses that have been reached, dedicated support, qualifications. I went over that already. Customer testimonials. What are the clients saying? There's a lot of success with this program. I do want to say that this is a amazing program. I can't stress that word out enough. And why so many business owners are missing out on this, it is because they're so stuck on the PPP, the EIDL loans, and then the alternatives. What could be that? Grant assistance, some of the other COVID bills that haven't been passed, as you've been probably hearing about lately. But this is one of those COVID bills out there that can help you get that refundable tax credit, get out to $26,000 per employee. Just imagine that, submitting your documentation in 2 to 3 weeks, you get a response back. And now you just have to wait to get your funds, and you can use this however you choose for your business to continue to build and grow and expand and even get out of the tight pinch. So now you're freeing up more time for yourself because you took the time to go through this. And now in quarter one, quarter two, quarter three, you're not so much in a state of mind, feeling stressed that you have to increase your revenue, that you don't have enough to supplement cash flow and you need it for this payroll purposes. Now your business is flourishing. Now it's kind of just like automatically working on its own. You're working outside of the business, not always inside of it. So that'll conclude everything from myself in this video. You got to see all the forms and so forth. You also got to see this questionnaire form that I'll link to you down below. All other related employee retention tax credits I might leave down below as well. Information for it, the SBA, PPP, anything that's not in effect. Grants, startup funding, non-startup funding, ways to get fast funding with bad, good credit, collateral, no collateral, and so forth. If you have any questions, again, please refer to the description. You can leave me a comment, question, comment, or concern. If you got value out of this lengthy video, please give it a thumbs up. Feel free to share it with others who you feel will get value out of it. It could be a complete stranger, friend, or a family member. And if you have not subscribed yet, please go ahead and do so and click that bell notification icon so you do not miss any future videos I will be coming out with. That is everything for now. Talk soon.